Benjamin Cowen, founder of Into the Cryptoverse, joins us today. Benjamin is an expert on the crypto markets and will be discussing his outlook for Bitcoin, the altcoins, and where exactly risk assets overall are headed in this very tumultuous, volatile environment. Welcome to my show, Benjamin. Good to host you today.
Pleasure to be here, David. Happy to come on the channel and look forward to hopefully bringing you on my channel soon as well.
Yeah, that'd be great. All right, Benjamin, let's set the stage for us with monetary policy. You were talking to me offline about the Fed and how you think that QE is unlikely to happen this year. And I'm just wondering why. People have been talking about a Fed pivot earlier than expected and possible QE in light of this recent banking crisis that we're seeing unfold and the fact that we're possibly entering a recession very soon. And the Fed wants to avoid a total collapse in the system. And so QE might be in the cards. But you don't think that. Why?
Yeah, so I think one of the things that people have sort of ignored is high inflation. And I think that sort of the argument of they're not going to continue hiking into a recession and whatnot, because historically over the last 10 to 20 years, at the first sign of distress, they pivot. But what's different this cycle than anything we've seen, at least in the last 40 years, is we have high inflation. So it's not that we've never seen this before. It's just that when a lot of these similar circumstances occurred, it was before many of us were even born, back in the 70s and the early 80s, and then in the 40s before that. So I think that I've listened to what Powell has said basically every single meeting for 2 years now. And he does not want to make the same mistakes of the past. And the mistakes of the past were essentially flipping back to quantitative easing, lowering interest rates in general, but also just expanding out their balance sheet. He does not want to flip back so quickly. So this chart right here shows us U.S. inflation year over year. I could actually probably find a better chart of that. But the whole idea is, look, they're not going to flip back to lowering interest rates and printing money when we have inflation still coming in at 5, 6, 7%. If you look at this, though, this chart here, this shows the inflation year over year, headline inflation year over year with the S&P 500 in the background. One of the things you'll note is in the 70s, we had 3 peaks. And I think this is what Powell is trying to avoid. He knows that, and basically it's almost a direct quote from him, that history shows that prematurely loosening policy would be a mistake. And the reason why it would be a mistake is it could lead to an inflationary decade where you simply see the S&P 500 go sideways for 10 to 15 years. This is what actually happened back in the late 60s, going all the way out until the early 80s. He said many times that they would like to see inflation back down to the target 2% so we can actually enter into a phase of economic expansion that can last 5, 10 years. Look what happens when inflation comes back down like the 80s. It was tough. It took 2 recessions back to back to do it. But afterwards, we basically just had a decade of economic expansion where the S&P 500 went up and inflation was relatively low. So I think he's going to be hesitant to pivot until he sees inflation closer to their objective, simply because otherwise they're going to be fighting this battle for the next 10 years.
So let's take a look at the stock market first then before we get into Bitcoin. Now, the stock market, specifically tech stocks, have been positively correlated with the Bitcoin price over the last few years. Two-part question. Do you think this correlation is going to hold? And if not, where do you think the stock market is going to go?
I think Bitcoin will probably loosely follow the stock market. Of course, there's periods where it becomes somewhat uncorrelated in the short term just because of the idiosyncratic risk with the cryptoverse. Like think about back to FTX and the fallout of that back in November. The stock market was already putting in new lows, had already put in their lows, and then Bitcoin went to a new low later on. So I do think there's some elements of correlation there, though they can diverge at various points. This chart here, I think, is an interesting way to sort of visualize prior bear markets and in the context of the current bear market. So if I just sort of hide everything and just show you the current bear market, we first must admit that we don't really know if this bear market is over yet. There's, of course, a lot of people in the camp that the bear market's already over, and they think that it ended back in October. And some of the evidence for that would just simply be to say, well, the average bear market's about 9 months. And why does it need to go back down when we've already sort of run that course? We had an 8 to 9 month bear market. It's a pretty standard bear market. Where I think things potentially get not so clear is that recessionary bear markets, so bear markets that include a recession, can easily last more than a year and a half, 2 years. longer. There's three different bear markets right now that I think are somewhat compelling to compare the current bear market to. We have a soft landing case back in the period of 1946 to 1949. This is what the bear market looked like back then. And this is what I would say would be akin to a soft landing for the S&P 500. This would basically just mean sort of chopping around at the lows and sort of the current highs for the next 1 to 2 years. This is what I would consider to be a soft landing. And this is I think there's reason to believe that something like this could in fact occur. There is, I mean, of course, while the money supply has been going down, and there's been a lot of reasons to be ultimately bearish on a lot of different assets, there's also a lot of liquidity out there thanks to all the money printing that occurred a couple of years ago. And so we could assume that it might play out like a soft landing like 1946 to 1949. Another great one to compare to is during a period of high inflation, 1973 to 1974. This is what a hard landing, I think, would look like, meaning over the next couple hundred days, as you get into the back half of the year, you could see the S&P 500 come down quite a bit if it's going to follow the hard landing scenario. And then finally, I like to compare it to the dot-com crash. I think there's still a lot of similarities between, dot-com stocks back then and at least crypto today. And it still really hasn't diverged from that bear market either. One interesting thing, though, is that if you overlay, the dot-com bear market and the 73 to 74 bear market and the 46 to 49 bear market, we've been in a period right here where in all of those prior bear markets, you can see that this was a phase when we were seeing some relative weakness in the S&P 500. So my general thoughts with the S&P are that probably the max upside this year is 4,300, maybe a little bit higher, but probably not too much higher if it can make it that far. I think there's still a great risk that we could easily go back down to the lows and maybe go just a bit lower. Even if it's a soft landing, the S&P going to 3,400 would still constitute a soft landing in my book.
I'm reading that Binance is getting sued. CZ violated compliance rules to attract and solicit U.S. users. There seems to be this trend over the last week of regulators coming down hard on not just Binance today, but also influencers, celebrities who have been promoting cryptocurrencies. Is this like a coincidence in timing that everyone's getting sued at the same time, or are the regulators finally onto something?
I mean, I think they're really cracking down on crypto as quickly as they can, and they're sort of turning off the liquidity flow into the cryptoverse, which I do think poses a problem for the cryptoverse, though I do ultimately think we will survive it. I think primarily what they're doing is they're going after, actors and people who are promoting things that probably don't really have any business promoting those things because they're not really sure what it is they're exactly promoting, and it's led to a lot of people sort of trusting those judgments and running with it. So yeah, I mean, I don't really think it's coincidental. I think this is some type of operation they're putting on to sort of remove some liquidity from the cryptoverse. But by no means do I think they're going to be successful in taking out the entire cryptoverse. In fact, I think we'll eventually just emerge stronger than we were beforehand.
Just real quick on that note, you are allowed to promote something as long as you follow certain guidelines, right? I believe you can't sell it within a certain time. I believe you have to disclose that you own it. It's not illegal in itself to promote an asset. Right.
Yeah. I mean, I think you're right. Like, I don't really think but I think the main issue is that a lot of people don't disclose that sort of stuff. And also, there's also this just misunderstanding as to what even crypto is, right? Are they securities? Are they not? And if they are securities, then people need to abide by the securities laws. If they're not, then of course that calls into question, well, what sort of laws do we need to abide by? But yeah, I mean, you're right. I mean, there are certain elements of people are allowed to promote things, but until there's more regulatory clarity on what it is people are actually promoting, then it would probably be a better idea for them to sort of hold off on those promotions.
Everyone's talking about a run of the banks. Do you think we can get a run of the bank scenario for the major centralized exchanges in cryptos? I'm talking about Binance and all the other big ones.
I don't know. It's been a topic for a long time as to whether some of these major exchanges will go down. My personal opinion, I should say my hope is that they don't, because I do think it would set crypto back quite a bit if they were. I would prefer to try to remain on the optimistic side for some of this stuff, because we saw how badly crypto got hit last year. not only with regards to sort of Luna, Celsius, BlockFi, Voyager. I mean, the list just goes on and on and on. And so I do think crypto investors, it'd be nice to sort of get a break here. I do think, though, there are going to be some fines across some of these exchanges that they're going to have to pay. It doesn't mean that they're not just going to brush them off like a lot of companies do when they do things that are not legal. But at the end of the day, I think that you could see some more exchanges go down, but some of the larger ones I'm hoping are a bit better insulated from some of the smaller ones. I would argue there's probably already some smaller ones that are still operating, and they could already be insolvent as they are. It just hasn't been fully brought out, and that's one of the artifacts of QT and rate hiking cycles by the Federal Reserve is it helps draw out which companies are zombie companies. It's just impossible to know beforehand.
The Federal Reserve is doing the regulator's job indirectly. One could look at it that way. One of the interesting, and I encourage everyone to check out Benjamin's channel, Into the Cryptoverse, some excellent analysis there. One of the recent videos you put out discussed the relationship between Bitcoin and the S&P 500 and the money supply. And what you've done is you've taken Bitcoin divided by, the Bitcoin price divided by M2 money supply. And you've done the same analysis for the S&P 500. Let's start with Bitcoin first. Tell us what you found and why this ratio is significant for your analysis.
Sure. Yeah. So one of the interesting things about risk assets in general, and I think I'm sharing my screen here, is that oftentimes we sort of just look at them and denominate them in US dollars and don't really look at them in any other way, right? So like this is the chart of Bitcoin, just a normal chart that we've come to know quite well. But if you divide it by something like the money supply, M2, M1, whatever it might be, though they did change the definition of M1. But if you divide it by the money supply in general, what you'll notice is that oftentimes we will come back to test important support levels or resistance levels as a function of the money supply. So there's this argument that some risk assets don't necessarily trend higher with time simply because of better fundamentals. And you can see that with the S&P 500 here in a minute, but perhaps they trend higher with time just because there are more dollars in circulation. And when you have more dollars in circulation, people are going to try to find a place to put those dollars. For instance, back in the summer of 2021, we came back down to around $28,000. And back then, there were a lot of arguments that we needed to go back and retest the all-time high from December 2017. Now, you'll note that we did not actually make it, not accounting for the money supply. We didn't even make it to 20K back in the summer of 21. But when you look at it, accounting for the money supply, M2, you can actually see it was a perfect back test of the valuation of Bitcoin when accounting for M2. And so recently, I thought this was an important level to watch because we have sort of rallied back up to this level. I mean, we're not even that far away from. You could already argue we've even had a wick up to these prior levels. And so I think with regards to risk assets in general, it's important to understand, are you seeing them go up because of a fundamental reason and they're taking more market share from the dollars currently in existence? Or is it just an artifact of more dollars in existence? And that is why the asset's going higher.
And so given that the growth of the money supply has been coming down, do you see a scenario in which risk assets fail to breach previous support levels?
I think this year is probably going to be a fairly difficult year for risk assets in general. I mean, with regards to specifically Bitcoin, it's not that dissimilar from even things we've seen in the past. I mean, you take a look at 2015 and 2019, we've had pretty similar years where it's just a fairly choppy year. In 2015, we went down and put in a double bottom. 2019, we went put in a higher low, and later on 2020. My general thinking right now is that this year is probably just simply going to wreck both the bulls and the bears. And again, we've seen that it's a very cyclical behavior, at least within the cryptoverse. So I imagine that risk assets will eventually put in new all-time highs, but I don't really see those all-time highs coming until after we get back to a period of quantitative easing. It doesn't seem like a likely scenario would be for risk assets in general or as a collective whole to go put in new highs when you see the money supply going down, when the Fed is still potentially raising interest rates, although I think they're either at the terminal rate or within maybe 50 basis points of it. So my general thinking is that your risk assets will see new highs, but it's not going to happen, at least for most of them, not this year.
Walk us through the basics of your analysis for Bitcoin. And well, let's start with Bitcoin before we move on to the altcoins. What are the major fundamental indicators you're looking at, Benjamin, before making a conclusion on whether or not Bitcoin is going up or down?
Yeah, so I have different risk metrics that I use for Bitcoin in general, and one of them is a price risk, one's an on-chain risk, and one's a social risk. The price risk and the on-chain risk are fairly similar in terms of what they've ultimately given throughout this year. You can see we sort of just have an ebb and flow where we go from low risk to high risk. So 0 is relatively low risk, 1 is relatively high risk. And the idea is just sort of scaling into the market when it's at low risk, scaling out when it's at high risk, and always remembering that, you can sort of have an idea that, or you can have a perspective that would lead you to believe that it might go down, but it doesn't mean that, say, like a DCA approach isn't worthwhile. So the price risk, which is, made up of things like the fear and greed index, logarithmic regression models for Bitcoin, and the Bitcoin risk metric as well. You can see that the risk on Bitcoin right now is around 0.31 or so when looking at the price risk, meaning that it's certainly elevated here off the lows, but it's still a far cry away from putting in new highs and going up to these higher risk bands, which I don't think is a likely scenario this year. You can also look at this with the on-chain risk, which is made up of several different on-chain indicators, including the MVRV Z-score, the Peel multiple, the MVRV score, the miner cap to thermocap, the market cap to thermocap, transaction fees, and the terminal price. Again, a lot of different things, but when you look at it and you sort of normalize all of them between 0 and 1 and account for diminishing returns and combine them all into one risk metric, you get something that looks like this. And I like this because, if there's a certain metric that you don't think is worthwhile to include in the analysis, like let's say you don't really think we should include transaction fees, right? Well, you can just turn it off and see kind of how it adjusts the risk metric. So when I look at this chart, we are still at relatively low risk levels, but it doesn't mean that we can't come back down and sort of retest some of these prior levels. We did the same thing in 2015. We did the same thing in 2020 as well. The main thing that I've been watching recently that has sort of been somewhat divergent from the price risk and the on-chain risk is the social risk. And the social risk looks something like this. And the reason why I like the social risk is because it's one of the few indicators that was actually at all useful in timing the second top for Bitcoin in November of 2021. Essentially, most every single indicator that people came up with back in 2019 and 2020 were flashing sell signals back in March and April of 2021. And then by the time we got into November, a lot of those had actually reset because we spent 3 months going down and then sideways into the summer of 2021. But the social risk continued to go back up to the highest risk band. Now, what's interesting about the social risk is that it's been continuing to slowly come down really ever since May of 2021. Now, if you're curious what the social risk is made up of, it's made up of metrics like new YouTube subscribers to various YouTube crypto platforms, people following various cryptocurrency analysts on Twitter and exchanges on Twitter and layer ones on Twitter and so on and so forth. So there's an element of, markets tend to finally bottom on apathy, right? When no one cares anymore. If you look at 2018, you can see that it wasn't really until the social risk kind of bottomed out over here that the whole market was finally done with its general bear market / sort of recovery year. So what I've sort of done is I just sort of combine all three of them, because you could make the argument for one being more important than the others, but if you combine the price risk, the on-chain risk, and the social risk, you get something that looks like this. And so I'm not really much in the business of trying to time exact bottoms or time exact tops, but I would argue that in general, when you see this risk metric, at relatively low values, it's generally a good idea, not financial advice, of course, but generally a good idea, if history is an indication, to slowly get positions within the asset class. And when it's at high valuations, it historically has been a good idea to sort of slowly scale out of the asset class. And sort of more to your point, in general, my thought for this year for Bitcoin is that I don't think it's going to new highs this year. I think we're mostly going to be chopping around a range. And that range is probably around the current levels to the high side. It could go a little bit higher, But also, to the downside, I think we could go back to the yearly open or maybe even slightly below the yearly open. So my thoughts for Bitcoin for the duration of this year are that it's likely going to be relatively choppy, not that dissimilar from things that we've seen in 2015 and 2019.
Former CTO at Coinbase, Balaji Srinivasan, recently made a tweet. I think there was a bet going on. I wasn't really sure what the details were, but basically he made a forecast that Bitcoin would reach $1 million by 90 days. I mean, the forecast aside, what would need to happen in our economy, in the financial markets, for that forecast to materialize?
Well, I think he even was talking about it somewhat. You need to see some element of potentially hyperinflation where people just lose trust in general in sort of the value of the US dollar, and therefore the debasement of the US dollar might lead people to sort of crowd into Bitcoin. However, I would say that there's a more likely chance that we see disinflation due to a recession in the back half of this year than we are to see hyperinflation. I don't think that the Federal Reserve will pivot back to QE and lower interest rates until they see inflation a bit further down. So, to your question, I mean, what would need to happen for Bitcoin to really rally on up to, let's say, at least new all-time highs? Maybe not $1 million. It's like instead of calling for the S&P to go to 5,000, you just say, oh, well, it's going to go to 140,000. Like, forget the arguments for everything in between. But let's just but if we think about Bitcoin, what would it need to go to all-time highs? I imagine you'd have some element of hyperinflation where people might just completely lose trust in the US dollar. Could send it there. But again, I don't think that's a likely scenario for this year. I think we're much more likely to see rapid disinflation courtesy of a recession in the back half of the year.
Beyond this year, is inflation the only criteria that we need or driver that we need to see for Bitcoin to retrace all-time highs and break that coveted $100,000 a coin level?
I mean, I think Bitcoin is much more of a function of things other than just things like inflation. I do think we see a lot of adoption within Bitcoin and the crypto industry as a whole. And I know one of the things we talked about earlier was all this sort of regulation coming down in the cryptoverse. While it's painful in the short term, I think it's actually going to make the asset class a lot more mature in the long term. I think of the cryptoverse as sort of like a pond, but we don't really have that escape to the ocean where there's a lot more liquidity. And the reason we don't have access to that liquidity is because a lot of major institutions aren't going to go buy Bitcoin or, cryptocurrencies in general if they don't really know what it is they're buying. Mainly, I would say with regards to the altcoin market, not Bitcoin. So no, the answer to your question was more so, what would it take for it to happen this year? If, by the time we get out into, say, 2024, 2025, I think that certainly Bitcoin could go back up. Even if inflation is at a few percent, I think Bitcoin could easily go back up, just as you see more adoption of the cryptoverse in general. Again, if you look at Bitcoin as a function of the money supply, it still has been trending up and to the right over a long period of time, unlike things like the S&P 500.
Why do you think Bitcoin moved up 35% since March 10th is my chart? I know it's still correlated with the NASDAQ, and the NASDAQ has moved up, but not by 35%. And what's surprising, everyone found this rather surprising initially, was when Silicon Valley Bank collapsed and Silvergate collapsed. These are crypto-related banks, yet Bitcoin continued to rise. Why?
That's a good question. So let me share my screen again. One of the reasons why I think that the Bitcoin has been going up quite a bit recently is because there's this escape going on from the altcoin market. And I think the altcoin market is helping to sort of rally Bitcoin higher and at least keep it elevated for longer. If you look at the Bitcoin dominance, which is this chart, you can see that we're actually at a pretty important juncture right now. This is the same level that the dominance has rallied to, several times really throughout 2021 and even in the middle part of 2022. And I think there's this natural belief by a lot that would assume that it's just simply going to get rejected and come back down to the lower part of the range. But history would show us that there is a cyclical behavior to the cryptoverse where, yes, the dominance comes down for a while, but then over time it starts to go back up. And then, it kind of comes back down for a while into these altcoin season phases, but eventually it goes back up. So one of the reasons, I mean, of course, there could be some elements of people not really trusting banks and putting it into Bitcoin. I'm not trying to discount that, but I do think there's a large element as well of you're seeing an escape from the altcoin market. And part of the reason that people might be leaving the altcoin market is because, again, the regulation risk of they don't really know what it is they're buying, and they're going back to Bitcoin. And so this, I think, really tells the tale. And an interesting thing about this, David, is that this is including stable coins, right? So the dominance, including stable coins, is approaching 48%. But something that I've been tracking for a long time is actually the dominance of Bitcoin not including stable coins. And if you don't include stable coins into sort of what you're looking at, it's actually, if the chart will load, it's actually over 50% already. So let me try to reload this, but it's already at like 52% in a relatively short period of time, right? 52.5%. So this is the dominance not including stables, which I think is a more appropriate way to sort of measure the dominance of Bitcoin. Furthermore, what you'll notice is that the dominance hit its lowest level back in May of 2021. So despite the dominance, including stablecoins, finding a new low, we can see that the altcoin market has basically just been slowly bleeding back to Bitcoin since May of 2021. Another way one more way to sort of visualize this sort of liquidity flow from the altcoin market back to Bitcoin. If you take the major one, right, Ethereum, and you look at not the Ethereum Bitcoin price ratios, but the Ethereum market cap divided by the Bitcoin market cap, this is what you get. And again, I'm of the opinion that the cryptoverse is very cyclical in nature. Yes, we spent a lot of time at these higher valuations relatively for Ethereum against Bitcoin, but I think it's only a matter of time now before we see this start to break back down the other way. So I think there's a large element of liquidity from the altcoin market has been going back to Bitcoin for the last, at least the last several months, which has continued to help fuel this rally that you've seen with Bitcoin.
Well, my follow-up question would be, why? Is this a cyclical issue where we're entering a bear market and people are just naturally a little more risk-averse going into the bigger coins, or perhaps there's another element at play that's spooking the altcoin market?
Yeah, I think it's a number of things. I think the most obvious thing is what's going to happen with the lawsuit with Ripple. And how would that affect the altcoin market? I think in general, there's a lot of regulatory risk for the altcoin market because we simply do not know if they're securities or not. I will say, at the end of the day, we buy and sell securities all the time, right? If you go buy equities, it's not like it being a security is necessarily a bad thing. But when you have all of these exchanges that that have altcoins listed, if you think back to what happened when the SEC sued Ripple over a year ago, a lot of the American exchanges delisted Ripple. And so there could be some element of fear as to what happens if all altcoins are declared securities. I mean, I don't really know if they are going to be, but one thing that we can be pretty confident about is that Bitcoin is not a security. And if Bitcoin is not a security, and you're worried about all these altcoins potentially being securities, then a lot of people, I think, are just simply going to go back to the asset that is seen more of a safe haven. In addition to all that, though, it's also just a cyclical thing. I mean, a lot of the altcoin market continued to go down against Bitcoin even after Bitcoin bottomed in 2018. Again, Ethereum dropped against Bitcoin until the third quarter of 2019 before it finally found its low. And you can see that right here. It really didn't bottom out until September of 2019 on its Bitcoin pair. So again, it's a cyclical thing of the cryptoverse. Of course, we can always find a narrative for it. I mean, I think the most compelling narrative is just regulatory risk. But the other compelling narrative, I think, is recession risk. I don't really think altcoins are going to provide much of a refuge in a theoretical recession. And then the last thing I'll say is that one of the things we've seen with the cryptoverse time and time again is that you will notice that the top 10, the top 20, whatever it is, they come and go, right? If you look at historical snapshots on CoinMarketCap, the top 10 5 years ago was different than it was 5 years before, except for Bitcoin. And so, yes, I think altcoins will come back again, but it might not be the same ones. And so I think people are sort of digesting that hey, maybe their altcoin that they like, maybe it won't go to a new all-time high, like a lot of the altcoins that came before it. Some of them will, but it's very I think some of them will, but it's very difficult to know which one of those are going to be, a couple years in advance. So I think it's just more so a flight to the relatively safer asset. It doesn't mean that Bitcoin can't go down against the US dollar, but it likely means that altcoins are going to continue to bleeding against Bitcoin for probably at least the next 3 to 6 months off and on.
Your statement that altcoins don't serve as a refuge against a recession, that more or less makes sense. But do you think that Bitcoin is this refuge? And I ask you this because Bitcoin has never really seen a real recession before in its lifetime. I'm not counting 2020. That was an anomaly because we've had unprecedented QE during a recession. We're not getting that now. There's no more QE, and we're entering a recession. Some economists have argued that we're going into a recession very soon, and so, if not already in one. And so what do you think is going to happen this time with Bitcoin?
Yeah, I think we're going to get one more scare. So I don't think Bitcoin is immune to a recession. We got a very brief look at it when March 2020 hit. But again, as you said, we just printed our way out of it. I don't really think the Fed's going to be as quick to print their way out of it this time. It doesn't mean that they're not going to go back to QE at some point. I think they will. But I think there's going to be one more scare with Bitcoin where it's going to go back down. It might be later this year. I'm thinking maybe the third or fourth quarter when it could happen, and get one more scare in as we get into a potential recession. So I don't really think Bitcoin is immune to it. I just think that during this phase, we're ignoring it. But part of that is just because liquidity is going from the altcoin market back to Bitcoin. The reason why I would argue that Bitcoin is relatively safer isn't because it can't go down. It's because Bitcoin leads the bull markets, as we've seen this happen time and time again. So you have sort of two different outlooks here, right? If we don't get a recession and we're already in the bull market and the bear market is completely behind us and we're just going to trend higher with time, Bitcoin's likely going to lead that, just like it led in 2021, just like it led in 2017, just like it led in 2013 and 2011 as well. So if we don't get a recession, Bitcoin's likely going to lead. If we do get a recession and Bitcoin goes back down, it's still likely going to outperform the altcoin market. And then once we're past the recession, Bitcoin will likely lead again. And so it's sort of this idea of, hey, if you don't know the direction of the cryptoverse, like if you don't know if Bitcoin's USD valuation is going to go up or down, one way you can at least hedge is to have some Bitcoin. And that way, if you want to buy altcoins, you can always do so later with Bitcoin rather than US dollars is sort of the argument. I think having US dollars is a good idea as well. But at least Bitcoin kind of hedges you in case the asset continues to go higher, while also showing that a lot of altcoins continue to devalue against it.
You said that we're likely getting one more scare by the end of the year. What's a support level that makes sense to you on the downside?
Yeah, so I would say there's some levels I don't really think are in the card. So I know like you've seen like 3,000 thrown out, and I don't think Bitcoin's going to go anywhere close to those levels. I think that there is a serious case to be made of a potential double bottom like we had back in 2015. So I think you could see something like that. I also think you could see potentially a slightly lower low, potentially a few $1,000s below the prior low. But I'm not really of the opinion that that Bitcoin will go to 5K or 7K or anything like that. This is more so like a worst case scenario would be for us to, and again, like if you look at this 2015 move, I know a lot of people are comparing this to 2019 because Bitcoin has rallied on up 80%, which is a pretty good move, right? But when you look at 2015, it also had an 80% rally before eventually just coming back down and retesting the prior low. So I would be looking towards, a potential retest of the prior lows. And depending on how bad a theoretical recession is, you could in fact see a new low. I was actually, when we spoke last time, it was I think maybe like in September, October, I said, look, I think we're going to have another move down at the end of the year, and we did get one in November. Although that move to the downside was somewhat tempered, right? It was only about a 25% move, nothing close to what we've seen in 2015 or in 2014, 2015, and in 2018 and 2019. So I think we're going to get one more scare, whether it's a double bottom, a lower low, it's hard to say. But I do think the downside is potentially only a few thousand. The max downside is likely going to only be a few $1,000s below the current low.
Okay. Finally, I want to touch on Ethereum and your asset allocation. Now, Ethereum, after the merge, post-merge, it was still inflationary for quite some time before it finally became deflationary. I'm just looking at ultrasound money now. It's now deflationary by the order of around 117 ETHs per hour. What does this mean from an investment standpoint? Does it matter?
Like I'm pretty bullish on Ethereum long term, but because I'm still in the camp that Ethereum is going to be bleeding back to Bitcoin for the next like 2 quarters. So at least. So because of that, I'm pretty light on my Ethereum position right now. I've shown this before, so I wanted to briefly show it. This is something called modern portfolio theory, and you can actually calculate out what appropriate weights in Bitcoin and Ethereum should be, basically just given the historical returns and historical volatility. And right now, the portfolio, which maximizes your risk-adjusted returns, let's just take it the Sortino ratio, the Sortino ratio, which does not punish positive volatility, says 65% Bitcoin, 35% ETH. But I'm nowhere near that allocation of ETH in my own portfolio. If you look over here at the volatility, the portfolio that minimizes your volatility, which is what I'm more so interested in right now, is actually 93% Bitcoin and only 7% Ethereum. And I'm actually a little bit less than that. So right now, I'm more so interested in minimizing my volatility during this very uncertain time. But I will say, David, by the end of the year, once I think that at least once some of these macro headwinds are behind us and potentially become tailwinds, I could see myself starting to increase my Ethereum allocation later on this year, and probably before we go back to QE and hopefully before the next Bitcoin halving.
One of the arguments, fundamental arguments for Ethereum eventually outtaking Bitcoin in terms of market cap, also known as a flippening, is simply due to the fact that there are more smart contracts, applications being built on Ethereum than on Bitcoin currently. I don't know if that will sustain this trend, but what do you think? Is that a factor at all?
It could be. David, I've actually gone back and forth on this very argument myself. I don't really know that anyone fully knows exactly if it's going to flip Bitcoin. I will say that right now, I would probably lean in the camp that it won't do it, but I'm willing to change my mind on that. I mean, previously I have been in the camp where I thought it could, but if you actually look at what Ethereum did this last cycle, and I showed this chart earlier as well. But if you look at, this is the Ethereum, this right here is just the Ethereum Bitcoin valuation. But in terms of the flippening, you need to really look at the market cap, not just the price ratios. At the end of the day, it did not put in a new high. Okay, I mean, you can see that Ethereum actually came a lot closer to flipping Bitcoin back in 2017, and actually this doesn't even go all the way back, but back in 2017 and 2018. So, despite all the new money, despite all the apps being developed, and despite all that, it still wasn't really able to take out the prior, the prior highs in terms of getting to that ultimate flippening. So I feel like right now I'm just sort of in the camp that Bitcoin's going to remain number one, and Ethereum is going to remain number two. So in the same way, I don't really see Ethereum flipping Bitcoin anytime soon. I also don't really see any altcoins flipping Ethereum either. I think that, if you think about it, I would say that you have two blue chips in the space, and that's it. Just Bitcoin and Ethereum. Those are the only two blue chips. Everything else, I think, is subject to come and go. So while I am bearish right now on the Ethereum Bitcoin valuation, and I have been for quite a while now, actually, while I am bearish on the Ethereum Bitcoin valuation, I do think it will rise back up in the next cycle and probably be right there with Bitcoin, putting in new all-time highs, which is not something I can say about the rest of the altcoin market.
Mm-hmm. All right. Well, Benjamin, I appreciate your time and your analysis. Thank you. Where can we learn more about your work? You have a YouTube channel and a website. Where else?
That's primarily it. I mean, I also have so the YouTube channel, my website, and then Twitter. I'm also mostly active on those three places.
Perfect. Well, Into the Cryptoverse, great website. Check out Benjamin's analysis and technical tools there. I'll put a link down in the description below. Benjamin, I appreciate your time, and I look forward to speaking with you again soon.
Thanks for having me, David.
Thank you for watching. Don't forget to subscribe and stay tuned for more.